All right, so let's see how that sets us up for the week ahead. Pete McGuire joining us from XM. Pete, a very good morning to you. Hope you had a very good weekend. So, if you like central bank action, you're in heaven this week.
Yep, absolutely, Andrew, and good morning. I tell you, we've got a big week ahead of us. We've got data dropping from ECB. You've got the Bank of England. You've got the Swiss. Will they knock it up 25 basis points? And then showtime with the Fed on Wednesday. Is it going to be 50 or 75? So, yeah, there's a lot of interest, and, currency markets are volatile, and that creates opportunity.
All right, so for the Fed, look, I mean, the market pricing in 50 basis points, it would be a shock, would it not, if it was anything else?
I think so, Andrew. I mean, the probability is probably 85 or 90% as far as that 50 basis points. So that's where everyone's hedging their bets. And but this market, as well as I do, surprises what creates the opportunities. And you've got to say a 10% chance that it could be 75. Let's wait and see. You've got CPI dropping, and that's going to be interesting as far as the inflation numbers and whether they've got that under control. And that chart says it all as far as the dot plot.
Yeah, absolutely. Well, you talk about the CPI number out Tuesday time, US.
Yeah.
What are your expectations there? Of course, it does come in higher than expected. That's we're going to see severe reaction, aren't we?
Absolutely. I mean, it's too hard to really forecast. You're sitting here just observing, Andrew. We've had some relief, I think, in the last matter of a week or two as far as crude prices or energy prices coming down. So that's an assistance to the wallet and the purse as far as spending power. But food's off the charts, and certainly rent is such a big component from house prices having big upticks. Landlords, due to increase in interest rates, naturally want a higher yield or a higher coupon. So that's the rent payment, and everyone's paying more rent across the globe. So that's an inflationary problem there.
Yeah, just before we get on to the other central bank meetings, you mentioned oil, the oil price there, Pete. It continues to come off. I mean, clearly that's reflecting the global economic outlook at this point.
Well, you'd think so, Andrew. I mean, from a recessionary standpoint, you're 50-50 toss of the coin whether we are into recession next year as far as the states and that CPI number and then GDP and all of those key inputs or the data points paint the picture. And you've had a great amount of relief. I mean, we're at $71 for WTI and you're at 76 for Brent. So are we going to see a 60 handle sometime this week? It just depends, I think, the CPI number and what's going on as far as President Putin with his, I suppose their threats and how that's going to be interpreted as far as price cap and so on, and what impact that's going to have to energy markets.
Well, and then of course we've got what's going on locally too with market intervention from the government trying to keep those prices under control for energy, not oil as such, but with those
electricity.
Electricity prices for Australians. How do you view that?
Well, Andrew, you know as well as I do, I mean, the consumption phase, you've got more air conditioning, you come into that summer months, air conditioning really starts to ramp up, so the draw on electricity and all of those factors greatly impact companies and, of course, the consumer at home. So more consumption and, everyone's power bills are going up, so maybe we're going to go back to washing your sheets at the beach and hanging them on the line and not worrying about dryers and all that sort of stuff, Andrew.
Washing the sheets at the beach. Well, I guess you can because it's just over the road, isn't it, for you? Hey, Pete, all right, let's go back to Europe then, the ECB. What are your expectations there? Because, I mean, the inflation's still, running hot.
Absolutely, running real hot, and I want to see how those numbers drop. And naturally, we're looking at about a 90% probability as far as the ECB ramping it up to 75 basis points as well. So that's the consensus out there, and I want to see... that's why this week's so important. I also want to see what the Swiss are prepared to do. They've got an inflation, pretty much locked in now at 3%. Are we going to see a movement from those guys? And what happens as far as Bank of England? So those three major banks, I think, will give a really good picture as far as Northern Hemisphere and how that's going to be ingested or digested from the Southern Hemisphere. Yeah,
so are you? What sort of rhetoric are you expecting from from Christine Lagarde then?
Well, she's going to come out and probably put some, as far as market sentiment and from a confidence standpoint, we're in a very delicate time of the year with energy costs soaring in Europe. Naturally, you've got that winter period starting to really bite as far as temperatures. And then the other side with Christmas sales and our retail sales going to be strong. And she's there to, with inflation edging up, and what's going to be the final number? You've got 3 Baltic states or Baltic members in the ECB with running inflation over 20%. So are we going to contain it, or are we still off to the races? And that's going to be difficult for the ECB president or chair to really satisfy the market.
It's quite peculiar when you look at the performance of equity markets in both the UK with the FTSE and also in the Eurozone. They've actually outperformed.
Yeah, they've done quite well.
Yeah. How do you explain that?
Well, maybe, Andrew, I think it's probably to the point that they weren't as aggressive as the Fed as far as interest rates, and maybe they were more depressed from those in the sense where we've seen a rally and a move to the upside, and they've continued that uplift. Whether it's going to maintain over the Christmas rally and whether it continues into January and February, we just have to wait and see. But as interest rates start to ratchet up, that could have an impact naturally to equity prices and forward earnings.
All right, then. So, Pete, to sum it up from an equities point of view, then you feel as though perhaps we need to wait for that key CPI number out of the States before we can ascertain whether that Santa rally is back on or not.
Well, I think so, Andrew. I mean, you've got that S&P. It was sold off a little bit on Friday night, down 0.75%. You're still around that 39.50 handle. We had a high of the year at 4,800. We're only at 3,600 going back to October, so it's had a dramatic rally. We're up the best part of 10%, and I want to see how the numbers drop and how that leads into the last 2 weeks of trade. And does Christmas come early or Santa doesn't arrive? We're going to have to wait and see.